Hello everyone, let's talk about ATR or average true range. ATR indicator is a tool used in technical analysis to measure volatility, to see if a market is volatile at the moment or it's not. So let me add the ATR to this chart. This is Nasdaq chart and daily chart of Nasdaq. Okay, we can find it here. This is eToro chart. So we go here, and as you can see, average true range, which we know as ATR. Let me change the color just okay, maybe to blue. Period. It's up to the trader, to change it if he wants. The look back period to use for ATR can be set to any number, and it is a trader's discretion. However, 14 days is most common on daily charts. So let's create. Okay, so this is ATR indicator. As you can see, we are on daily chart for Nasdaq. As you may know from 20th of February, the downtrend started, and very strong downtrend, and this can be confirmed by looking at the ATR. So the higher the number on ATR is, the more volatile is the market. So what exactly we can figure out by looking at ATR indicator? The fact is, average true range does not take into account any price direction, so it's not going to tell you if we are in uptrend or downtrend. So you either need to use other indicators like this one, alligator, or just look at the chart, and then you can say that we are in a downtrend since Feb 20. And because of this fact, it is not used as an active indicator to predict future moves. So what can we use this indicator for? It is useful in measuring the strength of a move. For example, if a market's price makes a move or reversal, doesn't matter if it's bullish or bearish, there will usually be an increase in volatility, and the ATR will start rising. As you can see here, ATR start rising when the big changes happens or reversal in the prices frequently. This can be used as a way to consider the strength of a move and decide to manage your existing positions or open your positions with lower risk, and It all depends on the strategy you use. And the fact is, day traders and I should say scalpers love this ATR because they love volatile markets. Scalper loves the volatile market because they want to open a trade, and just after few moments or hours they will decide if they with a profit aim, or it may hit their stop losses, whatever. But they like this type of markets, volatile markets. The ATR is using absolute values. So what this means, it means that differences in prices calculate the absolute values of difference in prices, and this is important because it means that when the number is higher, the volatility is more. But the other thing is you can't compare to different markets based on the ATR number. So what is how to use ATR? First, we can use it to recognize the trend strength, as I said before. But sometimes you can use it to set your stop loss and your take profits, but mostly your stop loss actually, sorry. So normally, as a normal fact that not fact, as a usual exercise, traders use 3 times or 4 times of ATR as they buffer. This is from the highs. So imagine here we have now 480 ATR, so I say 500, then you times it by 3 and it's equal to 1500. Then if imagine that you're using other indicators and which indicates now it's a good time to sell, then you put a sell a short order here, and your stop loss can be determined by, say we are at 8k price at the moment, so you should add 8,000 plus 1500, which is equal to 9500. So this can be your stop loss, 9500, but this is if you are a very long trader using daily charts. So for example, let's go back to 4-hour chart. Here, as you can see, the volatility starts to decrease because we don't see those big candles, and the number is dropping. So now the number is 161. If you times that by 3, then you'll get 3 times 160 equals to 480. And then if again Um, if you put a buy position, you look for the lower price that you had, for example today, then you minus 480, and that will be your stop loss for your line position. For example, now here, okay, save, sorry. Here you can see we are 31st, so the lowest price in 31st was 7785. So you open a buy position, then you add 7785 minus 480 equals to how much is this now? It's 0.473 and it will be 4.5, I think. Am I right? Oh no. Okay, so will be 7305 and 58. Yep. So this will be your stop loss if you place a line, open a line position here on 4 hours chart. And these things all depends on your strategy and how long you're gonna keep your trade opens, or you're a day trader, or you are a investor, or it's all changes. These numbers are just some guides. Some people use 5 times, or some people use 2 times. So it's all depends on you, but it gives you a good idea. And after working on a specific time frame, for example 4-hour chart on a specific market, like Dow Jones, or Nasdaq, or other markets, you're gonna figure it out which numbers are more suitable for you. So first start practice these things on a practice account, not a real account, to set the stop losses, and then after you feel that you've got enough confidence, then you can start using them on your real accounts. I hope you learned something from this video. Take care, stay healthy and strong during this coronavirus pandemic, and have a nice day. See you later.